Hey, 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 1, 2, 3, let's go. Sheesh, what's up, what's up, what's up? What is going on, everybody? We are live today on this beautiful Tuesday night here in Palm Beach, Florida. All right. Before we get this live stream kicked off, where is everybody tapping in from? Where is everybody tuning in from on the live? Let's get it. Let's get it. All right. Let's show some love as we kick this off. Let's go. We got Joey P from the DMV. Joey P from the DMV. Let's go. We got Joey P from the DMV. All right, we got North Carolina. Okay, so I'm seeing a lot of that kind of region, that area is in the house with us today. All right. We got Florida in the building, of course. Let's get it. I'm so used to checking my phone to look at the chat. I don't know why. I literally have the chat right here next to me. All good though, all good. Good stuff, and we're gonna be going over some great stuff today. So hopefully you guys are ready to take some notes, ready for the action. About to kick this thing off. All right. Let's rock and roll for today. Okay, cool. All right. So as you guys know, man, if you guys have been on live stream with me before, our setup is crazy. So you're going to see me looking around, you know, all the different corners and stuff like that. You know what I'm saying? I'm not on something. I'm not just looking around the room here. I literally have my ultra wide right here, and I have a monitor to the left and a monitor to the right. So I'll be checking all the different monitors, as we do have things on all of these different monitors as I talk to you guys. So I'm super excited for tonight. As you guys know, we were live yesterday, I would say afternoon, morning-ish, depending on where you are in the world. But that is Mondays, 12 p.m. Eastern Standard Time. We go live more for, you know, I would say market psychology. It's like not necessarily the charts, right? Monday is the day that we're starting off the week, and we got to talk about the things that we don't necessarily hear every day when it comes to trading, because a lot of what you hear with trading is going to be what we're going to talk about today, right? Which is the charts, right? How to analyze the charts, how to view the charts, what's the best strategy in the world, you know, all those different types of things. So what we're going to be more or less going over today is one of my favorite things to talk about. And I say one of my favorites because when I first started trading, I hated it. I hated it. I couldn't understand it. It was just so complicated. Everyone that I was learning from was using terms and terminology like supply and demand and all this extra stuff. And I just couldn't understand how to read the markets, right? And I know some of you here are probably in that boat right now where it's like you've been doing your research, you've been doing your thing, but getting it down just, you know, it's a little harder than what they make it seem, right? So we're going to be talking about, for the most part, SRTs today. If you guys don't know what SRTs are, support, resistance, and trends, okay? Those are my, like, bread and butter, and I'm sure most traders can agree with that. If you are a technical trader, you would typically want to know or learn how it is to read how the market direction is moving or going to move, right? So what I always like to tell people is when we're looking at the market, little quick recap, kind of very small of what we went over yesterday. All right. You know, we talked very briefly about the market and how the market moves in three directions, right? So how many of you were here yesterday? Is there anybody that was on yesterday's live? If you were on yesterday's live, drop a 7 in the chat box for me real quick, just so we can see. And if you weren't, drop a 1 just so we can see how many of you here are brand new, weren't on yesterday's, and how many of you were on yesterday's live. So if you were on the live, drop a 7. If you weren't, drop a 1. All right. So we kind of went over a little bit yesterday how the market moves in 3 directions. All right. Hold on. So we kind of went over, how the market moves in 3 directions. Okay. So the markets go up, as you guys see. Great example right there. All right. The markets go down. What goes up must come down. Right. Another great example. Right. Boom. Markets go up, markets go down. And on occasion, you're going to see the markets kind of just be stagnant and move sideways. Those are the only 3 directions in which the markets move: up, down, and sideways. Now, within that up, down, and sideways movement of the markets and understanding it, there are certain keys, right? I just like to say patterns to keep it simple. There are patterns that happen or that form in the market that happen again and again and again and again. And yesterday we talked a little bit about how to get better at those patterns with, your trading plan and being consistent with a specific asset or being consistent with a specific time, or, we went over all of that. We don't have to do that today, right? But as you guys get better at obviously understanding the market's movements and how the charts actually work, you'll understand how these patterns work in terms of up and down. Now, within these patterns, what I like to look for when I trade, there's a few different things that I've learned throughout my, I would say, career of trading, right? The first thing that I learned that has made me profitable as a brand new person, okay? And a lot of people ain't gonna like this, but it's all good. First thing was, who knows the first one? There's three things, right? 3 things that I use, okay? So the first thing was indicators, okay? So indicators, all right? So if you're brand new to trading, what indicators is, and I know a lot of, good traders, guru traders, naked traders don't use indicators. That's cool. I don't mind indicators. I like indicators. You guys see I have a few indicators on my screen right now, and I always trade with a stochastic or an RSI, which is also an indicator as well. But I use indicators a lot, okay? When I first started trading, indicators are what kind of made the market simple enough for me to even want to continue. I didn't get too overwhelmed. They're very easy, very basic. If this happened, then do this. If that happened, then do that, so on and so forth. So indicators are essentially tools that you can add to your chart. Yes, for the most part, some of them are lagging or whatever the case may be, but they're tools that you can add to your chart that might give you some good, I would say, analysis on what could possibly happen next based off of previous data. I don't want to get too much on indicators. I'm just teaching you guys how it is that I learned how to trade, right? So I started off with indicators, okay? And I got really good at indicators. Well, I wouldn't say really good, right? But I got good at trading with indicators. I made some money, especially with binary options. Once that happened and I kind of felt comfortable and I was diving deep into it, I started to get better with reversals, okay? And there's multiple different types of reversals that you can kind of look into, whether it be market reversals, whether it be candlestick reversals, whether it be, there's, like I said, there's multiple different types of reversals. We can go on for days talking about the different reversals that you guys can learn. You guys know I always talk about the very basic, the M pattern, the W pattern, which is essentially just a double top, all right? Double tops and double bottoms. Okay, let's throw up a quick M real quick. I actually think I just spoke about an M pattern in my last video. Right, boom, market drops, M patterns, we see them all the time, double top patterns and double bottoms. So those are market patterns. And then you have your candlestick patterns, right? So pretty much different candlesticks, whether that be, anything like a doji, all right? Understanding doji, candlestick reversals. I said patterns, I meant reversals. But, dojis, shooting stars, engulfing, right? All the different types, right? So reversals. And then lastly, is SRTs. Okay, SRTs. And I believe that if you can get good at these 3 things, you will essentially learn to be good at trading. It's just that simple. If you can get good at not a lot of indicators, you don't want to flood your screen with indicators, but typically there are some good indicators that can align with your strategy. So maybe an indicator or 2. Some good reversals. So understand reversals and reversal patterns. So reversal candles, reversal patterns. There's timing reversals, right? And I'll teach that to you guys as well. Market timing reversals. Fire training, by the way. but there's those types of reversals. And then there's SRTs, support, resistance, and trends. And the SRTs are like the bread and butter to any strategy. Okay, SRTs are like the bread and butter to any strategy. What I mean by that is that yes, I make a little bit of money with, especially with binary options, make a little bit of money just using indicators and reversals for the most part. But it wasn't until I started to understand market structure a lot better, and I started to actually trade with, when it comes to trends, breakouts, that kind of stuff. I implemented that. That's when things started to just absolutely get crazy for me, to the point where I'm sitting at home and I'm like, yo, it cannot be this easy. Like I felt like those millionaire gurus on social media, and I wasn't even there yet. Like, I'm not even making all that money, but that's how I felt, right? Because I'm just taking these trades and they're just slapping. They're slapping nonstop, slapping. And I'm like, yo, it cannot be this easy. So if you're someone that's brand new, you're looking for what it is that you should be getting good at, this is where you should start, in my opinion. Look up some good indicators, think about it, right? Look up some reversals, some reversal patterns, and get good at SRTs, market structure, support, resistance, and trend line. Okay? Bada bing, bada boom. Okay, so I'm just checking the chat real quick. All right? So yeah, are you guys following me so far? Let me know if you guys are following. Okay? Okay, cool. So what I'm going to talk about today is, like I said, support, resistance, and trends. And when you're looking at it, okay, does anybody here struggle with that, by the way? Does anyone here struggle with support, resistance? We'll start with support and resistance. Anybody here struggle with like plotting it or understanding it a little bit? And it's cool if you do, right? It's cool if you do. Okay. So I like to make it very simple. I know sometimes I look at people's charts and they have so many, different levels of support, resistance. Like their charts is just a bunch of lines everywhere. And mine looks like that sometimes too, but there's intentionality behind it, right? So when you're looking at the chart, and it all depends on how it is that you trade. So if you're a scalper, if you're a day trader, right? I can't speak too much on swing trading because I don't swing trade. I've never swung trade in my life. Can't speak too much on it. But what I believe is that it's always just best to stay with what it is that you can currently see on your chart. So what do I mean by that is like if I'm trading today, and let's say this is my chart for today, okay, I'm going to get good at just looking at what's happening maybe in the last 24 hours or so, right? So I don't have to zoom out like this and just plot up a bunch of different, let me change this, right? Boom. Plot up a bunch of different lines and be like, oh, all of these are support and all of these are resistance, and I don't know, which one is the valid one or which one should be my entry point, and you don't have to do all of that, right? And the reason why I'm showing you guys, because this is literally what some of you guys do. You just look at all the different points in the market, and look how fast I just did that, by the way, right? So it's like second nature at this point, right? But this is how some people's charts look. And they're like, I don't know when to enter or when to re-enter, right? So what I would say, what I would recommend, okay, is like I said, it's just looking at where it is that you're currently trading. Okay, some people agree, some people disagree. What I do is I just right click, reset chart view. It shows me for the most part what it is that I'm looking at. If I want to, I can zoom out just a little bit. Okay, and we're going to look at the charts just like this. Okay, now when we're talking about finding those levels, those key levels, and we're not getting into the advanced stuff. I know some of you guys are super advanced, whole numbers, quarter theories, all of that. We're not talking about that today. All right, so I don't want to see that in the comments, right? We're just talking about the basics of support and resistance. All you're looking for is areas in the market that have there's multiple reactions in the same area. Now, they don't have to be same exact, like pinpoint to the exact price. You probably won't ever get that, right? That's why you draw up zones. So to give you guys a quick example, what I mean by that is if I was looking for just some random levels here, okay, what I would see is if we're looking at the markets, okay, there's a reaction here. You guys see that? And I like keeping the crosshair on as well so I can see these a little better. Reaction here, reaction here, reaction here, reaction here. Okay? So these multiple reactions, if I were to draw a horizontal line in this area, you guys can see there's multiple reactions within what we would call this zone. So this will be a zone. Now, whether or not it's a support or resistance zone, we haven't gotten into that yet. I'm just showing you guys how to identify areas where you would have potential reactions in the market. Okay. So right here, the reaction was a bounce. Right here, we got a bounce. Right here, we got a bounce. These are all reactions. This right here is even considered reactions. These are reactions in the market. Here we got a break to the downside. Comes up, retest, same level. Comes up, retest. Then we break back up to the up. Retest on the upside. Retest again to go ahead and break. Okay, and I'm going to tell you why, and we're going to get into why exactly this happened as well. We'll talk about that in a few minutes, okay? And how to know when it's going to break and when it's going to bounce. So that's what we're going to talk about in a little bit, right? But you guys see here multiple reactions at this price level, okay? So this would be a good level to plot up like a support or resistance, so on and so forth, right? Now, if you guys are brand new, before we even continue on with plotting up support and resistance, if you're brand new and don't yet understand what support resistance is, it's really just saying the floor and the ceiling of the market. That's all it is. So when we're talking about support and resistance, we're talking about the floor and the ceiling of the market. So for example, if we draw a level of support right here, okay, and I'm gonna draw this arrow and I'll call this support. I'm gonna slow down a little bit because I'm going a little bit fast. Right? So support is essentially the floor of the market. What that is it's holding the market up. So just like if I were to stand right now, the floor is what's keeping me from falling to the abyss of the earth, right? Whatever's below me, I don't know, right? So the floor is supporting me right now, okay? Now, if I were to jump, there's a ceiling above me, right? So the ceiling is what's going to stop me from getting to the second floor. So there's resistance there. There's something that's stopping me. When we're looking at the markets, that will be the top of the market. That's resistance. So it's an area that is essentially stopping the market from going higher. So support is the floor. Resistance is the ceiling. Does that make sense to everybody here? Okay. Drop a yes in the chat if you guys are following. Very basic, simple stuff right now before we get to the good stuff, okay? So you got the floor and you have the ceiling, okay? Why is this relevant to us as traders? Typically, the goal is to be able to identify when you're taking your trades, you would always want to take a trade depending on the floor and the ceiling of the market. You're taking your trades based off of what's happening at these support and resistance levels, okay? So if, for example, okay, we come down to a support, and that's the floor, okay? And we break the floor, okay? We know that the market is moving down now, because what happens when the floor breaks? You fall, right? So once the floor breaks, we fall. Now, a lot of times the floor is going to break, and then it will come back up and do what we call a retest. It'll retest that, you know, and hit its head, right? Essentially hit its head, right? And now the floor has become the new ceiling for the market. So we know once that becomes the new ceiling, we're looking for sells in the market. That's typically how you would trade that. That's called a break and a retest. So you got the break, comes back up, retest. So the floor now becomes the ceiling. And then you'll sell off on that when you get your confirmations. Remember yesterday we talked about the difference between a trade confirmation and a trade entry, right? So you got to identify, you got to lock in and identify those entry points. When do you enter that trade, right? So boom. Now, that's a break and retest. Now, there are also people who, as soon as it breaks the floor, they enter the trade for a quick scalp. As you guys can see, we're looking at an example right now live in the market. Okay, right now live in the market, we're looking at an example where the exact level that we drew our support came back for a retest, bounced up, and is currently breaking. That's what it's currently doing. It's currently breaking, right? So if you were a breakout trader, that's what they're called, a breakout trader, whereas you enter on the breaks, you would have already been in this trade and you would have been in profit because it's still dropping. So we got two consecutive after the break, but 2 consecutive bearish candles going down, and it's still dropping right now. Check our stochastics, and we're actually just hit oversold. So yeah, that's probably going to drop for a little bit. Now, what it might do, and we're going to be on this live for a little bit so you guys can actually watch this and see, right, if it does it or not. Again, nothing's going to be 100% in the market, but I'm just saying what it might do is after continuing down a little bit on this break, it might come back up to retest this area, right? So the breakout traders are already in this trade. The break and retest traders are waiting for it to come back up, retest, and then they'll enter for the drop right there. Okay? But this is why it's important. Now, a lot of people trade without support and resistance, and this is why those individuals probably aren't as successful, because you don't understand the structure of the market and how the markets move, right? So again, support is a floor, resistance is the ceiling. Okay, so you got support and you got resistance. So that's the S and the R and the SRTs. Next, you have your trends. Okay, you have your trends. And what a trend is it's the overall direction of the market. So which direction is the market moving in? That is what we would call the trend. Okay, in this area, there was no trend. The markets were stagnant. It was in a range. It was in consolidation. If we go back here, the markets are in a trend. Okay, so we can see clear as day. This was a clear uptrend. Right? So that was an uptrend. Now, trends tend to be broken. So what we would do is, if we did like, let's do a market replay real quick, and then we're going to get into actual market structure, talking about higher highs, lower lows, so on and so forth, right? But let's do a quick market replay. I want to get the support, resistance, and trends down first. Okay, so we see the market come down, and this was an overall downtrend. So the market was moving down right here, going down, 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 down. Okay, what do I do next? Well, what you would want to do is you would want to wait for the break of the trend, typically, right? So you're either trading the continuation of the trend or you're trading the break of the trend. In this example, we're going to be talking about the break because we're already at the floor, we're at support, and we can see clear as day that the market has started to go the opposite direction now, right? So from here, as the market was coming down, from here to here, we see we're now going up. So it's not complicated stuff. We see we're going up. Once we see that we're going up, what we want to then do is you're going to take your trend line. Now, I like to use the horizontal ray. I know a lot of people use the trend line. I like to use the ray, and I'll show you why. So you're going to take your ray from right here. This is your point A on your ray, and you're going to extend it right here to this next area that it bounced, and that'll be your point B. Right, point A and point B. And what we're going to do is, if you're trading this trend continuation, because clearly the trend already broke, right? So we're continuing to the upside. That's the hopes for this trade right here, is to trade the trend. We would want to wait for the market to come down, hit the trend, or come close to it, and continue to go up. Okay? Does that make sense? Now, why is that relevant? Because when you're looking at trading, right? So there's 3 types of traders. You have your technical trader, you have your fundamental trader, and you have your sentimental trader, right? They're all different trading styles. I recommend learning all of them. That's my mentality for everything. You know, they say a jack of all trades, a master of none. and they stop right there. But if you guys look up the full saying, it's a jack of all trades is a master of none, but oftentimes better than a master of one. I just rather do all. So I do a little bit of fundamentals, little bit of sentimental, and I'm primarily focused on technicals. But when you're looking at sentimentals, right, what happens is, especially with crypto, everybody here familiar with crypto in any way? We know about Bitcoin, Ethereum, that kind of stuff. So what tends to happen is whenever crypto, I'll use crypto as an example, is shooting up, everyone who's kind of like uneducated on like how to trade and how the markets actually move, what they'll do is they'll see this huge potential of it going up, and they'll start entering right away as it's moving up. Okay, as it's moving up already. And what they don't understand is that as price is moving up, all it's going to do is it's eventually going to become overbought, and it's also going to likely hit a level of ceiling, which is resistance, right? And you guys see that right here. Okay, so if we're looking at this area, this is no coincidence. If we're looking at this area, the market's bounced off this trend line right here, made its way up, started consolidating. We got a lot of wicks here, indecision. Okay, and you would ask yourself, why did that happen? Okay, now who can tell me why? Who can tell me why this is happening right here? Who can tell me why this is happening? This is not like I don't know how to say it. I didn't like look at these charts beforehand, by the way, guys. I'm giving you guys live examples just as we go, right? So the reason why the markets make its way all the way up here and stopped is because if we look back, you always want to look to the left-hand side of the screen to determine what's going to happen on the right. So if we look back this way, we follow the arrow, what do we see? This is resistance. So even though we are, I mean, I don't even know how many bars this is, right? Let's see, we are from here all the way over here, almost 15 hours later, right? So about 15 hours later, okay, even though we're all the way over here, we can look, because most people wouldn't do that. They'll see the market shooting up. They're like, oh my God, it's going up, it's going up. And then they'll enter the buy. You got to understand how this works. So you don't want to do that. You look over here, you say, oh, look, we're at a level of resistance. It's a level of resistance. So what I want to do is I want to see it. It's either going to break it or it's going to bounce. It's going to break or it's going to bounce. Okay. In this situation, we know that we're currently in an uptrend. So my hope would be for it to bounce, come back towards the trend line, and then continue up. You guys following me on that? Right? And that's essentially what it does. Okay? Now, again, like I said before, it's never going to be exact. It's not going to be exactly on the line. But how do we know good areas? Well, if we look over here, you always look this way to determine what's going to happen. This is the ceiling back here. This is the ceiling back here. Why is it the ceiling? Reaction, drop, reaction, drop, reaction, drop, reaction, drop. We comes back up, reaction, drop. Until finally it broke out, went upstairs, comes back, and now the old ceiling is the new floor. Does that make sense? Now, the reason why I like to use the horizontal ray instead of the trend line is because the trend line only goes as far as you put it. So it only goes as far as you put it. whereas the horizontal ray goes indefinitely. All right, it goes indefinitely. Okay. So we'll continue on watching this. You guys see that? Happens again right about here. Happens again. Look. The old ceiling is the floor. So now we got some equal lows. Same thing, it's just bouncing off. And as you go as well, you guys can also adjust. You can adjust your trend lines. It's never like a set in stone thing. What I would do is I would even do something like this. And this is just a little trick that I do. You know, I'll take this, so that's point A, point B. Once we start to scaling a little bit, right, I'll go like that. And I'll create a new point A and point B. Right, now we're up here. And keep moving that way. Right, clearly we got the big break. Big break, big break. And let's see what happens there. Again, I didn't look at this ahead of time, so I don't know. So we're just following along here. So you guys see that? Look how that played out so beautifully. You guys see how that played out so beautifully? So these are the rays that we plotted up from back here, by the way. From back here. And look what happened. So these are the breaks. You guys can see. We were following the trend. We were following the trend. Uptrend, uptrend, uptrend. Comes down. Breaks that trend line that we had here. Continues down. Breaks the trend line we had here. Retest. Drop. Comes back up, retest the trend line, drop. Isn't that crazy? Like, I don't know, like I get excited when I see stuff like that because like it just reassures me how simple this actually is. It's like it's not complicated stuff. Like it's not complicated stuff. If you could just get this little basic things down, it's really simple things. Again, I'm not gonna say it's easy, but what I will say is that I would say 90% of trading it's psychology. Most people fail because of the way they think, not because of what they know or what they don't know on the charts. I literally just drew some lines for you guys, and we played the fast forward into the future, and look how that played out. And again, this wasn't planned. This is literally the chart from today. Like this happened today. I don't trade what is this, GU? Yeah, I don't trade GU. It is one of my favorite Forex pairs, but I'm not trading regular currencies. I trade NAS. Right? But that was pretty simple, right? What do you guys think? Was that pretty simple? Was that like understandable? Do you guys have any questions before I move on that? How about that? Let's start there. Do you guys have any questions? Okay, so you got your support resistance, your floor and your ceiling. That's really what you're focusing on. You're focused on multiple reaction points in the market at the floor and the ceiling. That's how you determine your floor and the ceiling. Multiple reactions, multiple reactions, multiple reactions. Reaction here, breakout here, comes back, reacts here, shoots up. It's all reactions. You're either getting a bounce or you're getting a break. That's it. Same exact thing applies to the trend line. The trend line is a diagonal support and resistance. So you have your support and resistance that's horizontal, and then you got your trend line. It's the same concept. It's just diagonal. So it's following the direction of the market. Support and resistance goes from left to right. Okay. Trend lines follow direction up or down. Positive. Positive. All right. Easy stuff. Easy stuff. Okay, so now let's talk a little bit about understanding structure itself. Okay, now what do I mean by that? Because I can tell you till your ears fall off. You know, when the market goes up, you know, wait for it to pull back, but what you have to learn is like, how do you even know? How do you even know if we're in an uptrend? Now, some of you might say, oh, well, if the market's going up, we're in an uptrend. That could be true, but that's not always necessarily the truest, right? What you would have to learn to understand, or learn, better yet, is higher highs, higher lows, lower highs, equal highs, right? So structure, market structure, okay? And I'm not going to say there's a difference, but there is kind of a difference in the understanding of structure versus like support and resistance, right? So let's look at this, for example. Boom, boom, boom. Actually, I think this area here, again, we're going to look at the same area we were just looking at, right? So this area is great. Great area. Great area. Okay, boom. If we're looking at this area, what is the market doing? Dropping in the chat. What's the market doing? What is it doing, and how do we know? How do we know this? What is the market doing? It's ranging, right? It's just consolidating, up and down, moving sideways, same levels over and over again. Right? So constantly hitting that support, constantly hitting that resistance. It's just a range. Okay? Now, if we went from here to here, what's the market doing? Are we in an uptrend or a downtrend right here? So I'll tell you guys what I see. Okay? That's right. Straight line path. Still ranging. Okay? This is not in an uptrend. It's not in an uptrend. So it was kind of a trick question. Right? So if we're looking at this, so like most people would have looked at this chart right here, and they would have seen that the market was, you know, overall it's coming down. Then we have this range right here. Then it continues to go down. And then from there, it comes up. Right? Comes up. But why, just based off of the, like where I boxed off at, why is this still a range? Who can tell me? Like, why are we still technically consolidating? We're not in an up, we're not in a down. Technically, this is still a downtrend. Like, this is still the continuation of this downtrend right here. So even though the markets is coming up, why is this still a downtrend? Who can tell me? This is where people get caught. They get trapped. Right? We haven't broken structure. That's it. So even though we did create, right, this right here, now this is a higher low from this point, it is still essentially just an equal low in the range, in the overall range. Right? And to break it, what we need to see is, we need to see higher highs. So to go from a downtrend to an uptrend, we need higher highs. We need the highs to get higher. So even though the low got higher, that's great. But we didn't break and create any higher highs. Okay? So if you're new, write this down. Okay? You have higher highs, higher lows, lower lows, and lower highs. And then you have equal. I'll put L and H, equal highs and lows. Okay, so this is what you want to, this is what you would want to learn. You would want to learn this to understand structure, right? So how this will look is essentially, right? So as you guys see here, this will be our, obviously our lowest low, right? So this is the low of the market. After coming down, 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 this is the low. All right. This would be a higher low. So that means the lows are getting higher. But we still have equal highs. Equal highs. Equal highs. And our equal highs are all at our area of resistance. So equal highs, equal highs, equal highs, all of these are at resistance. It is not until we break that resistance and create the new high. Okay. This is a horrible example with this right here because this is consolidating, right? So this will probably be the best one, but it's still something, right? We got a little something here, consolidates, comes down, and then it goes up again, right? But it's not until we create the new high. He said, "Am I related to Spike Lee?" No, that'd be great though, right? But it's not until we create the new high that we have shifted the direction of the market. Okay, so as you guys see here, okay, we went from. So I'll write this in real quick. Boom. Lower low. Making my life complicated because I don't want to type it. Higher low. Okay. Equal high. Higher high. You guys following me? Higher low. Come downward test. Right? Higher low. And higher high. Okay. Now, if you guys take that, all right, that understanding, do you guys understand that? And I know there's going to be a lot of people watching the replay. If you're watching the replay, just drop the comment, right? Participate. We're going to be on, by the way, we're going to be doing this style every week. So we're going to be doing this every week just to make sure, you know, we're getting a lot of those new guys in and helping them understand how simple this is. And we'll get more into strategy in our Discord and that kind of stuff. But I just want to make sure you guys got this down first. Just the basic stuff, easy stuff. Right? So drop some sevens in the chat if that makes sense so far, right? So you got your higher highs, your higher lows, your lower highs, and your equal highs and your equal lows. Okay? Boom. Okay. Now we're going to do it coming down because yeah, this is repetition. This is repetition for you guys. I just want to get those reps in, right? Hit the gym this morning, got some good reps in. We want to get the reps in on the charts. Okay? So now the market comes up. We got this high up here. Okay? When do we get out of this trade? What would be a good point if we're in this position right here? What would be a good point to get out of this trade? I mean, I can't even really ask that because there's so many different strategies. You guys probably have your own strategy that you're probably trading, right? I don't want to confuse you. So what I would do is I just go based off of trends. Right? So where the trend line is broken. And this is something that I learned as well. It's very simply, oops. I typically just create these little fans of trend lines going in like this, right? And boom. So as we got the market reversing, so obviously we come down here, okay? So this is what would have triggered me a little bit, okay? Looks like a lot. It's not a lot though. It's not a lot of pips. So what would have triggered me a little bit is, look, so we come up, we get this higher high right here. Markets drop down, shoot back up. So we know, okay, we create another boom. That's a trend right there. And then once it comes down, it starts breaking. So it breaks there, as you guys can see, clear as day. And I did that. You might say, how did I draw that up? I did that from here to here. I just drew the trend line from there to there. So it comes up, bounces, kind of retests, and then it breaks. Okay. And then from here, as you guys can see, the next one bounces again. Okay. But what do we get? So we went from a higher high to a lower high to an equal high. So they're showing me that there's some kind of shift because we're no longer getting the higher highs. We went from a higher high to a lower high to an equal high. Okay. So now we'll take this and I'll just start moving this over. And as you can see too, these reactions are within essentially that same price zone that we initially were looking at, right? Same price zone. Nothing much in terms of, the difference. Okay. So then it comes down. We create. This is essentially, we went from a higher low, right? Higher low, comes down, lower low. You guys see that? So if you're looking at this, this was a higher low. Market comes up, comes down. This is the new higher low. Okay, just in this area. And then we break it. Create a new low, lower low. Now we know the markets are going down. Equal low, equal low, equal highs. Comes up, lower high, lower low. That's a downtrend. All right. Now, I know there's a lot of drawing on there for you guys. Well, hopefully this is making sense. It's all simple stuff. It's all simple stuff. Okay, so all we're looking for, again, just to get, a quick recap in there, right? I don't want to drag the session on too long. I think for the most part, what you would want to do is come back, you rewatch it a few times. If you're new to this, if you're not, this is all basic stuff to you. If you're new to this, you would rewatch it a few times to understand it a little bit better. It's just a basic understanding is that in the markets, you're going to create highs and you're going to create lows, right? If you get a little bit more advanced, you'll probably call them swing highs, swing lows, all that kind of stuff. I like to keep it basic for you guys. So you're going to create highs and you're going to create lows. And depending on these price areas that you see multiple reactions in, all right, this is typically where you will see these highs and lows, right? Because the market's moving patterns. So if there was a reaction there before, there'll probably be, does that make sense? The market's moving patterns. If there was a reaction there before, we got a reaction here, market comes down, bounces up, okay? When it comes back down to that price area, we get a reaction again, a bounce up. If it happened before, it'll probably happen again. It bounced up. This is another reaction. It's not a bounce. This is called a break. So you got a reaction. Then what happens after it breaks? The old floor, which is support, right here, becomes the new what? The new ceiling. Guys see that? So the whole floor becomes a new ceiling. So we broke, comes back up, retest, and drop. Until we come up and we consolidate in this area and we shoot up. And we come back and we retest the area again. And then we shoot up. Okay. Danny Lopes said, where would you take your entry? Where would you take your entry to the downside? So where at? Let me know where at. Where at on this chart? I don't know if you can see the times down here. But let me know what time or what, you know. This is 9, 10, 11, 12, 13. What area are you talking about? If you can't see the numbers on the bottom, let me know. I'll figure it out. You should be able to see it though. Oh, 800. Let's see, right here. So this area. This is what you talk about right there. All right. So if we're looking at this, right, I'll give you guys a quick what I would do in this situation. So if I'm looking at this, I'm just checking the chat real quick. My bad, guys. Yep. So if I'm looking at this, right, this is before that 8 o'clock period, right? So coming up, so we can see clear as day, markets are coming up. So my initial take on this is that the markets are in an uptrend. That's what I would look at. Now, I always do a top-down analysis, so my charts wouldn't look exactly like this. I'm just doing it real quick for you guys just to show you essentially what I would be looking at. All right. So I would initially be looking for ups because that's where the market's going right now. So I'm just telling you what I would be doing with my style of trading. I'm a scalper. So I would be looking for ups. All right. So what would happen is I'd be looking for ups and then we obviously wouldn't get those ups, right? Right. So boom. Okay, cool. So hold on. Let me go back again. How do I go back? Oh, right here. Select the bar. Okay, cool. All right. So right here, and this is where strategy comes into play. And I'll tell you guys why. I'll give you a little taste of how it is that I trade strategy-wise. So initially, you'd be looking at this area. And I always wait for kind of to get a little bit closer to like whole time frames. So if you guys, you've been with me for a while, you know I talk about market timing reversals, right? So 15, 30, 45, whole hour, right? So quarter hour, half hour, whole hour, so on and so forth. So being that we're so close to that 8 o'clock mark, I'd be looking to probably trade as close to 8 o'clock as possible, right? But let's just say right here, we're seeing that we're getting this bounce from what I plotted here to here. Now I'm seeing a bounce here. Okay. Most people would see that and say, okay, cool, I'm going to go ahead for a buy. Why wouldn't I buy? Who knows me? Who knows why I wouldn't buy in this situation? Who knows me? Who's been with me for a while? Let's see. Why wouldn't I buy in this situation? And this is why what we spoke about in the beginning is important to me, at least. Every trader is different. I know there's a lot of traders who hate, for whatever reason, they hate indicators. I don't hate indicators. I love indicators, right? But so a few reasons. Number one, as you guys can see, someone just said in the chat, Samantha, right? We're too close to resistance, right? So if I were to buy here, it wouldn't be right now, even though we're kind of getting that bounce. Most people will rush into the bounce. I wouldn't buy it because I would wait for the break first. That's the first thing. I would wait for the break. Okay? because that will be a double confirmation. That's like that's confluence, right? So you get the double confirmation in there. You get the break and the bounce off the trend line. It's like, okay, this is a good buy. Okay, so that's one reason why I wouldn't buy in this situation. The second reason is this is my moneymaker right here. My stochastics. They look like they're about to cross down. And a cross down on a stochastic means what? It means sell. Right? So this is why I like indicators. Yes, I could have figured this out just by looking at structure or resistance. I could have figured it out just by looking at that. Facts, that is true. But before we even get to, before we even get to resistance and the possibility of the buy, I'm already looking at this as like it's likely not going to buy. I'm not looking for the break right now is my point. I wouldn't even be looking for the break because I already see my stochastics crossing down. And I love my stochastics. For everyone who has a thing against indicators, man, I'm here to tell you tools are put in your life to make your life easier. If I'm digging a hole and somebody offers me a shovel, I'm taking the shovel. I ain't going to be too prideful and say, I'm a man, I can do this with my hands. You know what I'm saying? I need that shovel. You got a shovel for me? I'm taking the shovel. So we got two indications here that the market's going to be coming down. So even though originally I was looking for buys on the uptrend, to answer your question, Danny, once we get to this point right here, this is the point you were asking about, I know that we're coming down because stochastics is crossing down, and coincidentally, we're right at resistance. So now in my mind, I'm thinking we're going to hit resistance. We're going to bounce off resistance, just like we're doing right here. And we're going to drop with the stochastics, breaking that trend line to the downside. When would I have entered? I would have entered on the confirmation of that. I want to see the stochastics cross down. I want to see the bounce off the resistance, and I want to see the break of that trend line that I was following. Once we break that trend line that I'm following, that's typically where I enter because I'm a scalper. Okay? That's a good indication for me. All right? And then you see here, depending on obviously what your stop loss is, I would have still been in. Let me see. Hey, that was only 2 pips. We had 2 pip drawdown. All right. And then the markets dropped. Does that make sense? So to answer your question, confluence, right? I wanted to see a nice bounce off of that. I wanted to see the break of the trend. I wanted to see my stochastics crossing down because I trade with the stochastic. Once I got those 3, I would have entered that trade. Whether it be right here, whatever, I don't know. We would have had a little bit of drawdown, maybe 2 to 5 pips, depending on your broker and your spread. And then it would have dropped. Does that answer your question, Danny? Let me know. Now right here, I'll teach you guys. We'll go a little extra trading here. I know I'm almost at an hour here, so I'll have to cut this video up a little bit. But I'll give you guys a little extra training before we wrap it up. So I might be going too much, right? Giving you guys too much stuff. So right here, how would I know? Because like some people, I don't trade. I got the rest of the trade kind of just floating there. I'm still watching it. I'm not worried because at this point, I already took the position, most of the position out. My stop loss is in profit, so I can't lose any money on this trade. Anything beyond this point is profit, but I'm still monitoring. I'm still watching. So this is what I would do in this situation. What we do is we watch it come down, we watch it come down, we watch it come down. At this area, we already know, okay, the market has become oversold. When the market becomes oversold, what does it do? It shoots up, right? So I already know that there was going to be a slight pullback in this area, okay? The difference maker of me just hopping out of the trade at this point and just taking whatever profit I had or letting it ride out would be what happens, what the market does at that pullback. So being that we broke this trend line, we're now pulling back. What I would want to see is I would want to see the market pull back to the trend line and continue down. So like a break of the trend and a retest of the trend and continue down. What I wouldn't want to see is for the market to pull back and come too much above the trend line, because that's once it does that, we're out of the safety. I'm closing that trade. Okay, once it breaks the trend, it doesn't even matter. It's just playing, it's like not even playing it safe. It's just being disciplined and having your strategy. But once I see it go back up to the top and close that candle out, I know we're likely going to go back in that direction. So I wait. Now, obviously, we didn't get any closed candles above. What we did is we got consolidation, and we had a few reactions right here at the trend line on the bottom side. Now, eventually, during all of this consolidation, what is our stochastic doing? It's showing you that the momentum in the market is now shifting to overbought. So even though this isn't a big move, it's still overbought in the market. And our stochastics are just about to cross down again, which they actually do right there. Coincidentally, bounce off the trend, bearish candle, followed by another bearish candle. Let's see if it continues down. I don't know, like I said, I don't know. Not paying attention too much to that. But we did. We got a nice little continued drop right here. Okay. At that point, I probably would have had a steeper trend line going. Something like that, maybe. I don't know. Depends on how much I'm monitoring it, right? But I would have been out of the trade. I would have already been out. Because, again, I just go based on the way that I trade is I follow the markets down and I follow the pullbacks. I follow the retests. I follow the pullbacks. So anytime I get a pullback, I just, that to me, it's a small trend, but that's the new trend. So from here to here, I drew a trend line, point A to point B. Just show you guys real quick. I'll use my ray. So this will be my point A, and the point B will be right here. All right, you guys see that? Use my ray. Oops. Boom. So as the market is dropping down, once it comes back up, if it retests, I'm looking for it to retest this and continue down. That's how I ride the trade out. If it doesn't and it breaks it, I close the trade. I'm good. We take our profit and we're done with that position. Which, as you guys see, it did break and it continued up. And at the same exact mark. I mean, I've done so many trainings, even on YouTube, on the stochastic. I don't know why people even question it for scalping. But at the same exact time, as you guys see here, stochastic crossed up, oversold, and obviously we got the push to the upside. Bada bing, bada boom. Sheesh. Sheesh. What'd you guys think of that? All right, what did y'all think of that? Nice little scalp. All right. Woo! Listen, an hour straight of talking is not as easy as it looks. Trading might be easier than talking for an hour and 15 minutes straight. I'm like out of breath. I'm thirsty. All right. So, all right, guys. So that was pretty much it for today. We're going to wrap it up for today. I think that was a pretty fire session, especially here for YouTube. You don't really see a lot of these types of trainings on YouTube, to be honest with you. Nice, live, you know, answering the questions in the chat, doing those kinds of things. So we're going to wrap it up for today. We're going to be back Thursday night. Thursday night, what we're going to do is we're going to focus a little bit more on, I wouldn't necessarily say, yeah, it's going to be binary. We're going to focus on binary options on Thursday night because I know a huge portion of my following still trades binary options. So everything that I teach you from Monday, Tuesday, you can apply to anything. We're going to actually talk about on Thursday a little bit more in depth of what we talked about today, and I'm going to go a little bit more deeper. But on Thursday, we're going to be talking about specifically my binary options strategy and how I trade binary options. I've been teaching that for years, and at this point, I also It's already on the internet for free anyway, so I don't mind, you know, going over the strategy and everything like that for you guys on YouTube. So we're going to be teaching binary option strategy. If you guys are into binaries, make sure you tap in on Thursday night. And even if you're not into binaries, I would still recommend tapping in on Thursday night, because yes, it's going to be a binary based strategy, but we're still going to be talking about things that I apply to my everyday trading today. For example, going deeper into the stochastics, talking about same thing, market structure, higher highs, higher lows, reversals, Bollinger Bands, all those types of things. We're going to be talking about that on Thursday. So with that being said, we're going to wrap it up for tonight. Have a blessed night, everybody. Watch the video again if you need a little bit more help. But with that being said, it's your boy Rico, aka Rockstar FX. I'm out. Peace.